Okay, in this video, I'm going to talk to you about 5 student loan myths that you may have heard about that you don't know that's actually not true, right? People talk about things and you're like, oh, I heard about that. That's not true. Well, let's talk about it. Okay, the first student loan myth is that you need to take out student loans to go to college, grad school, whatever, right? You don't need to take out student loans. I think I was not even presented with the opportunity to think about other options, right? Like there are options out there. You can save for college. You can work. I know I had a job that actually paid they paid tuition reimbursement, right, for me to go to college. Like you can do that instead of taking out student loans. You can do grants, free money, scholarships, free money. You also have to make sure you apply for the FAFSA, F-A-F-S-A, at the right time, right? Because that's kind of the determining factor whether you apply for free money. But you absolutely do not have to take out student loans to go to college or grad school. There are other ways of doing it. And I think if more people realize like the long-term effects of having student loans, they may put more energy into actually considering other options as opposed to having student loan debt. Also, if you're military or a former military, a veteran, you actually have access to free money as well. So for you and your children, if you are a disabled veteran. So consider these things before you take out student loans for yourself or for your children. Consider the actual ancillary benefits you have for having served your country. Okay, student loan myth number 2. Having student loans will lower your credit score. Absolutely not, right? Now, this is coming from a person who has student loans, was still able to qualify for cars, for houses, for credit cards, have my credit cards increase. It doesn't lower your score. What lowers your score is not paying your student loans, right? If you say, I can't afford it and you just stop paying it, having inconsistent payment history is just like any other creditor, right? It has to report to the credit bureau what you pay or what you don't pay. That is what's going to lower your credit score. I know also even in the past year, as far as deciding whether you qualify for homes and things of that nature, as far as your debt to income ratio and how student loans factor into that, there's been some re-upping of how they consider it. And I did a whole video about that, but it's actually beneficial for those of you who perhaps said, oh, I didn't qualify for student loans, not because it lowered my credit score, but because it affects my debt to income ratio. It may actually help and impact you in the future positively. So as a general though, student loan debt does not lower your credit score. Okay, before I get to number 3, comment below what other student loan myths that you've heard about and you basically debunked because you're like, no, that's not true. I've experienced it personally and I saw that it's not true. Share with the others, share with the community. We're all a community here, the student loan debtors community. But share it in the comment section below. Okay, student loan myth number 3. Yes, 3. So private and federal loans are the same. Not true. There are definitely big differences between the two. So let's say you have federal loans. They're backed by the federal government. Similarly, meaning like if you don't pay them, they have the ability to garnish your wages, right? So wage garnishment is something that perhaps private loans have to actually go through the process of suing you and taking you to court to get a wage garnishment. With the federal government, they can actually do that because they're the federal government, right? They actually also have, on a positive note, they have income-based repayment, which some private lenders don't offer to their student loan debtors, right? So student income-based repayment and also public service loan forgiveness. That's a federal government program for federally backed loans. The private sector loans don't qualify for those things. Sometimes you can get a lower interest rate with the private loans. A lot of times it's going to be a variable rate, which means it changes. It doesn't stay the same. But you can possibly shop around and get other interest rates as a private lender. I would say that to be careful before you decide whether you want to take your federal loans out of federally backed, because there are some protections that are available to federal loans under the student loan policy that are not available to private loans. For example, during this whole pandemic where we had payments suspended and interest suspended, that's only been for federally backed loans. So if you were in the private sector, you probably still had to make payments. You probably still had interest accruing. That was one of the benefits of having a federally backed loan. Okay, student loan myth number 4 is you can't invest and pay your student loans at the same time. You have to do an either or thing. And it really isn't an either or thing. Speaking from experience, yes, student loan payments take up a good part of my income, but it doesn't leave me with zero to invest, right? So I make it my business to still invest in things, whether it be for stocks or real estate or other kind of investment tools. I still do that. And I would say that $1 today is worth more than $1 tomorrow. If you decide, oh, I'll invest once I finish paying my student loans, you have access to less options because inflation and the options available to you, they may not be available at a later date. So I wouldn't say to put off investing because you're trying to pay off your student loans. You can do both. You still can qualify for things. Let's say stocks. You don't even have to have any credit pulled to invest in stocks, and you can start at a small amount and still invest while still paying down your student loans. I wouldn't say do one before I start doing the other. Okay, the fifth one is for student loan myths. Stay tuned, because I have a bonus one too for you. Stay tuned. But the fifth one is student loan settlements are the best way out of getting out of debt, right? Student loan settlements, debt settlements are not for everyone. They're usually offered to those who are maybe behind in their payments and they were trying to offer some deal to them to basically be done with it. A lot of times the amount that is forgiven, let's say you owed $100,000 and they'll say, okay, we'll settle for $40,000. That difference between the amount that you owe and the amount they settle for, the $60,000 difference, is considered gain income and you'll have to pay taxes on it. That may not be best for you. That may not be the best option. It'll also remain your credit report. Granted, if you already are messing up your credit because you're not paying it, that may be an option for you, but it's not a get out of jail free card by any stretch of the imagination. So I just want to let you know that student loan debt settlement agreements are not for everyone. Okay, here's the bonus. If you stay to the end, here's the bonus. Student loan deferrals are not unlimited, right? People think like, oh, I can't afford it, I'll just keep deferring it, right? There is a maximum, there's a cap on the amount of times you can defer things. There's forbearance for, let's say you're in school forbearance where you don't have to pay. That's how you see these people that are like forever students because they never want to pay their student loans back. But as far as deferrals, let's say you get out and you can't afford to pay it and you need to defer it. For some loans, there's, I think, a 3-year or 36-month maximum deferral. So in the lifetime of the loan that you have. So you want to use those wisely. Use it at a time when you really can't afford to pay it versus like, oh, I don't feel like paying, I'll use a deferral for the next year. Oh, I don't feel like, at some point it's going to expire and you're going to have no other choices but to pay it. Or perhaps if it's a federal government loan, you may have to get your wages garnished if you're not paying it. And I know people personally who've had their wages garnished until they paid up their student loan debt. So don't think you can get away with it. Make sure you plan accordingly when you're going to use your deferrals because they're not unlimited. All right, hopefully this was helpful to you. Hopefully you debunked some of the things that you learned about student loans, and I'll see you in the next video.